Good evening, everyone, and welcome to the PivotBoss pre-market video for Sunday night, March 15th, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the weekly time frame of the ES. Again, I wanted to put out a video here Sunday evening because, number one, I will be out of the office Monday through Wednesday of this week, so I did want to get a video out ahead of that. And also, the Federal Reserve slashed its policy rate by a full percentage point here today, lowering its target range for the federal funds rate down to 0 to 0.25%. So near 0% here. A big move here in response to the COVID-19 crisis. Again, we're about 3 weeks into this sell-off. 1, 2, and 3. We opened Sunday evening with immediate selling pressure on that news and are down, limit down already. Heading into RTH, this is the third week running that we're seeing that, or at least 1, 2, 3, maybe 4 times that we've already seen this over the last couple of weeks. But right now I wanted to show the weekly time frame because, again, if we're still talking about COVID-19 a month or 2 or 3 or more from now, this is going to intensify to the downside immensely. Right now we have the 2018 low that comes into play right here, just around the 2300 level. We got as low as 2380 last week. Again, that low very, very likely to be taken out. That's something we talked about at the beginning of the selling pressure. But now that this thing seems like it could continue to permeate throughout the globe, we could be looking at much, much lower prices ahead. And I am not even taking out of the question here that we could see something in the 1800 range or maybe as low as 1600 as breaking through 2300 starts to take out major support, wherein the next major level down wouldn't be until about 1686. That is the 100% target of this key range here. This key range has been in play, and if we were to take out that key range low, 1686 would be the next target down. So that's pretty significant there. If we were to get that zone, 1600 basically would be more than a 50% cut from the 3400 highs. And again, getting a 50% haircut there would likely start to at least bring in some more bottom fishers that could start to bring this thing back up and perhaps trade somewhere between 16 and 2300 for a while as this thing builds out. Again, that 2018 low, very, very important. If we take it out, it could open up quite a bit of more downside. You also see that we do have a bit of a what could be a head and shoulder type of pattern that's in play. So again, as I've mentioned before, in a bear market, the rallies tend to be more significant and severe than what you would see in a bull market. So we could theoretically bounce all the way back up toward 2900 and still see weakness down the road if this thing were to continue to push lower and COVID-19 continues to permeate. So again, this is something to continue to watch, that 2018 low. If taken out, we could be looking at much more weakness. 2000 and then 1686 could be the next 2 key levels down based off of that range. If we take a look at the NQ again, very similar price action here, although this one is quite a bit above the 2018 lows. 58.20 is the 2018 lows here. We're still trading now 75.41 at the moment. Again, limit down right now, but if price can't get back above 8K pretty soon, we are likely looking at a drop back toward 6K to 5800 at the very least. There's a great LVN between 5,000 and 5,500 that may be tested. That could provide a bounce opportunity, but again, we're way off those levels, and right now the way things are going, again, the closures and lack of travel and all the various things, canceling of events, is leading to, again, just major impacts on the global scale for the entire market, and that could continue to lead to much more selling pressure ahead. Again, 8,000 is going to be key. Failure to get above that zone starts to open up quite a bit more downside ahead. Looking at crude oil, this one's down about nearly 2% right now. It's done a pretty good job of holding the $30 level. Very impressive that despite the quite a bit of weakness we've seen, $30 has held for about a week here. And again, we took a major gap down to get there. And if we look at the intraday right now, you'll see here how it's been playing out. We have very clear support off 30 here that's holding after this tail. If there's a failure to hold 30, that's going to open up quite a bit of weakness here to test 27, 26 lows. The 2605 lows from several years back would be in play. And again, when we looked at this in a weekly time frame and our monthly market outlook back in March, one thing I mentioned was this large compression here has broken to the downside, and that would suggest much more weakness ahead. And that could lead to prices that are, quite frankly, in the single digits even. It's not that far off from going below 20 and perhaps getting back toward 10, 8, or 9 in that zone. It clearly has enough juice to do that. The market right now, the black swan event that continues to be seen by COVID-19 here continues to play out. So again, I wouldn't rule out any possibilities here at this time. But again, $30 is going to be very important. A failure to hold that level opens up quite a bit of weakness. That could open up 25 or even 20 down below very, very soon. Above 35s, if it can find some strength above 35, again, 38 to 40 could be in play, but continue to watch 30. All right, let's take a look here lastly at gold futures. Again, gold has seen quite a bit of weakness here over the last week in tandem with the market. As the market has sold off, so too has gold, and it has been kind of a head scratcher here as to why. But for the most part, again, gold has been way up. The market is starting to be way down, and at times when you have something that is completely valued much higher than it had been, you start to see profits taken here and then put to work down below. But again, this is also a black swan event that could be leading to a mass exodus in anything not named cash right now. So again, this is going to be very important to see if gold can continue to stay above that 1525 key level or 1500 in general. Because if so, then again, we have a good chance to come right back up and start a new range somewhere between 1500 and 1700 in the near term. Now, looking at long term again for gold, one thing I've mentioned to our traders in our room is that based on market structure here, we have some really good levels to watch. The 1800 to 1525 has been a very good, reliable zone here. We also had some areas down here that were very important. And so whenever price pushes back above, like it did here, into the prior price distribution, there is a tendency to come back to retest that low and then shoot higher to the next level up. So if price can continue to hold 1500 in gold, it could see a continuation not only to retest the recent highs at 1700, but perhaps to test the top of the range at 1800 down the road. So continue to keep that in mind. All right, that is it for now. Again, remember, I will be out of the office for the first few days of the week, but I did want to give you a video here to start the week off and see how this thing continues to play out as we progress forward. Everyone have a fantastic rest of your week here, and I will see you soon. Take care.